Welcome to the Sushi Swap Onsen AMA, where we bring on projects that have partnered through the Onsen program and give them a platform to reach a larger audience. Today we've got Mike, Lukas, and Hristo from Bmi Mutual. How are you guys today?
I'm doing fantastic, man. Thank you for having us.
Doing great, thank you.
Absolutely. Thanks for having us. Good to be here.
Yeah, you bet, you guys. Thanks for coming on. Yeah, we'll get started here with a few intro questions and get things rolling. And yeah, as the audience has questions, please you can ask them through the AMA text questions channel. We'll have that open and keep that be monitoring that and keep an eye out for questions. And you can also raise your hand and come up on stage, and you can ask your questions that way as well. We'll give it about 10-15 minutes and then you can come up and ask as we kind of open up the conversation. But yeah, if you guys don't mind, let's start off here with intro and a little bit of your background on each of you and how you all got involved with Bmi Mutual.
Yeah, sure. I'll try to blow through it pretty quickly. So, in 2017, I started a cryptocurrency focused law firm, and at that time, it was one of the only law firms focused on blockchain and crypto in existence. I think there was I hear a little bit of an echo, but um, back then there was only three other law firms in the world that was doing this that I could find on Google, and did that for 4 years. Like fast forward 4 years later, and I had already been part of as an advisor and as general counsel um, about almost 100 or so different projects, and I got to see vicariously and experience what made each one a success or what made each one a failure. Made many friends in the space, traveled all over the world, spoke on stage about crypto and legal and the future of this, and eventually a partner of mine and myself had an idea to start up our own project because we saw a spot in the market and a thing that needed fixing, a problem to be solved, and we started working away on Bmi Mutual, and that was I want to say 14 to 15 months ago. I don't know the exact date when it started, and now we're here. So we've expanded, we've grown. Now we have about 40 different people on the team full time, focused on Bridge.
Nice.
And it's amazing. Yeah, thank you. And I guess I'll hand the mic off to Hristo.
Thank you, Mike. A little bit regarding myself. So I come from a traditional finance background where I spent over 12 years in various financial institutions and banks as either a data scientist or analytics director. Essentially, this concluded around 5 years ago when I decided to switch to crypto full time. Since then, I have been specializing in doing tokenomics and token setups for various projects, probably also over 100 to date. And I was invited earlier this year to join the Bmi Mutual team by Mike.
Great, cool. And Lukas.
Hi guys, Lukas, COO of Bridge. I'm the person who brings traditional startup experience, if you want to call that, into the team. I'm a securities lawyer by trade and worked in a VCP fund for a while after that, but I spent most of my career in tech management and business operations. I was a product owner at Uber in the Eastern European region. Was an advisor at Founders Institute, so I've analyzed, advised a lot of startups. I've seen them rise, I've seen them fail. Also ran my own data trading company for a while. First exposed to crypto in 2018. Was investing and reading up and got dragged into that rabbit hole for the first time back then, and joined Bmi Mutual at the beginning of this year to help growth and scale the efforts to bring in that Silicon Valley and traditional tech experience into the company and see whether I can contribute and build this into a crypto unicorn.
Yeah, nice. And yeah, I guess with Bmi Mutual here, you guys kind of talked about getting involved here and everything, but what were some of the inspirations for this, or what problems did you guys see that wanted to really bring this to life?
Yeah, I mean, right around DeFi summer last year, just hack after hack, brilliant new platforms coming up with crazy ideas, ways to improve our decentralized finance system, and then products coming out like too quickly and getting hacked, people getting rugged, being taken advantage of, just tons of exploitation in the space. And at that time, there was only Nexus Mutual. There's some smaller platforms like EtherRisk too, but they're focused on more like traditional real life scenarios. But Nexus was the only one doing like smart contract coverage, protocol coverage, and I won't get into it too much, but we saw areas in which we thought we could be different and maybe improve some things from them. And primarily, we wanted to focus on actually being decentralized, owned and operated by the people, and having no way for the team to interfere with the claims assessment process
Yeah, right.
and in general the insurance process. So we went to work on making this like fully decentralized model for how insurance can work and be scalable, and also use game theory to properly motivate people to vote accurately on claims and not in their own best interest. And that's what we've come up with. So that was the opportunity. We started working on it. Since then, of course, many other protocols have come and gone, like Cover Protocol, very famous one, which is no longer operating. It had like a flash in the pan, really explosive growth, and then kind of died out. Um, but yeah, we're aiming to kind of be around for the very long term and building for scalability and sustainability.
Yeah, nice. Yeah, cool. Yeah, and then I guess as you've just kind of tied in, or you started to discuss like some of the aspects of it, maybe it's a good time here to kind of give like a brief overview of Bridge Mutual. Yeah, kind of the V1, and then you guys are looking to, you're migrating to a V2 as well. So let's maybe let's break that all down and kind of discuss the overview.
Right on. So at its heart, um, Bridge Mutual is a decentralized insurance protocol or risk coverage protocol that focuses on hacks, rug pulls, and exploits. So basically, any permanent loss in value that someone experiences due to a hack of a protocol or its founders, an exploit within the code, or a rug pull from the team, anyone on the team, is reimbursed in full up to the policy maximum, which is up to the person to purchase. The prices of the cover change as the market changes, so it gets updated in real time based on the utilization ratio, which is something I won't get too much into here. But basically, if there's high demand for a specific protocol, like coverage for a specific protocol, then people will have presumably purchased up coverage, and there'll be less in the pool. And as there's less and less coverage available, the price gets higher and higher, and so does the APY, right? And then vice versa is true. If there's no demand for it, like what we see with Compound, people trust Compound so much, hardly any policies really get sold for that protocol. So the insurance for it is very cheap, but so is the APY for coverage providers on that pool. And so yeah, it's market based. And version 1 was launched about 3 months ago, right? Right, yeah, 3 months ago, and that was essentially like a proof of concept to show like viability and also market demand, and it was very very successful for us. Since it's launched, we've had a couple of small bugs here and there, but nothing that was damaging to the community or the people. And there was no exploits, there was no hacks. We're going strong. The code is solid, and we've actually already had a claim with Popsicle Finance. There was like a $23 million hack, and there was a policy out on that particular protocol when it happened, and it went through the whole approval process and was um, by and large like vastly approved by the community. So it proved that people will vote against their better interests for the sake of the protocol because of the way that we've designed the claims process. And yeah, they got approved, and the person got paid out almost entirely in full. It was like a $50,000 claim. They got like $49,800
Oh,
back
wow.
in stable coins. It was nice. Yeah. So the protocol works, and now we are emerging into version 2. The issue with version 1 was that essentially the money that we receive is not really doing anything. There's no capital efficiency. You can't really support and provide coverage with leverage, but all that is changing, and Lukas will kind of talk about now what version 2 is and how it's different from version 1, and why it's really exciting and it's big news for us.
Nice, nice.
Yes, so as Mike just said, version 1 was the MVP. This was the proof of concept that we wanted to deploy and gather feedback on. And in a week, we'll be deploying Bridge Mutual version 2. We called this update the great reinforcement. We used to be big players back in the day, so we enjoy this chapter names for updates. Also gives a little bit of the story behind it. The reinforcement means that we're introducing a number of very exciting features. This is a huge update. Primarily what it does is it introduces a capital pool that will invest the idle liquidity we have on the platform into yield generation protocols, low risk yield generator protocols,
Right.
which essentially allows the protocol to generate revenue
Mm-hmm.
for itself, vault, and therefore for the Bmi token holders, for the protocol as a whole. So this update pretty much introduces us to the world of DeFi. We'll be ready to we'll be ready to integrate with protocols and participate in the entire world of interconnectability of DeFi, which is very exciting for us because it opens infinite amount of cooperation, partnership possibilities with other protocols, but it also introduce a number of other features. Another big one, which we're very, very happy to introduce in a week, is our leveraged portfolio pools. So essentially what it means is that it allows users to utilize a multiplication effect. So right now, users are providing coverage liquidity into one pool. So that would be a pool for one of the blue chip projects we have currently featured on the platform, Compound, Synthetics, SushiSwap as well. But what the leverage pools will allow users to do is it will allow them to put money many times in the same pool and into many pools at once. So it becomes a very exciting and quite novel way to generate higher yield via also a higher risk product. But we are very happy to introduce that because right now in the DeFi world, this is a relatively new product, which will allow users to get quite high APY. Right now, we expect this APY to be on the first pool starting next week, approximately 20% on the stable coming from the stable coins and 80% from the Bmi token, so around 100% APY in total. This will rise, of course, if the price of the token will rise. However, the very important thing to say here, as this is a relatively sustainable APY for the users, because it's based on a genuine risk-based financial product. So the APY, it's not coming just from the huge supply of a relatively new token that's it's utilizing the volatility and the mechanism of the new product. This will be a high APY product that will stay relatively high APY because of the underlying relatively high risk exposed to it. So the market and users will be able to assess the risk themselves, of course, but this product will be perfect for packaging it into a multi-element, multi tranches products with fixed API, of course. So there's a lot of cooperation, a lot of collaboration that this opens, and we're very happy to introduce it. A lot of other things are happening as well. We're introducing shield mining and widget for affiliates, tools for growing the company and improving that scalability. Users will be able to resell our insurance, our policies with no upfront cost in exchange for a commission. Shield mining introduces new tokens or native tokens of other protocols into the platform. So the APYs of particular pools, for example, Sushi Pool, could be boosted with Sushi tokens themselves into the pool. So the APYs will go up even more, and they will be diversified into a number of tokens. The entire ecosystem will benefit greatly from the launch itself. All of that is happening under the umbrella of Bridge Mutual version 2. This launches exactly in a week on the 27th of October, and we're extremely bullish and happy to finally bring all those tools to the community.
Yeah, awesome. Yeah, it sounds like a really good update, and yeah, capital efficiency. That's a great way. That's great to hear. Yeah.
Yep.
Yeah, and with that, then, like, let's maybe break down some of these things that you guys have discussed and kind of like what's headed, or like how this all works. Like in regards to coverage providers, what are they, and who can become one?
Yeah, absolutely. So a coverage provider is basically someone who is putting their capital behind a protocol and betting that that protocol will not suffer from a coverable event, which would be a hack, an exploit, and a rug pull, right? They're putting up, at this point in time, we take USDT, and later on in the protocol's life, we will add other stable coins to provide as coverage. But so they put up their USDT, and if there is a claim that someone makes on that protocol, the whole protocol can then vote on the claim. When you submit a claim, you also provide information in a text format. You can provide links and photos, and everyone on the protocol that has BMI locked to vote can see it, and it goes through a claims assessment process, and the result is obviously shared publicly and then carried out automatically. And if a claim passes, right, let's say like perhaps you have money in SushiSwap and SushiSwap suffers from an exploit, and the person who made the claim and has the policy suffered from a loss. If it were to pass, then they would get paid instantly through an on-chain transaction governed by the smart contract to pay that person out whatever the amount that was achieved by consensus is the loss, right? So the reason they would do this, the reason that you'd want to be a coverage provider, is that you make yield, right? You get paid back in Tether, you get paid back in BMI, and also we're releasing shield mining with version 2, which is when a protocol is able to put their own tokens and put them up as yield for insurance for their protocol, and users who provide coverage to that protocol will then get their native tokens as a reward in addition to USDT and BMI. So you get paid out
Wow.
the longer that you have your money at risk, right? Your capital at risk to be given to a claimant.
Cool. Yeah, so shield mining is on that aspect there. Now, sorry, just to go back, you said like so based on the protocol that you were a part of, or like that you were providing LPing for, so like triple rewards. Is this what I'm hearing, or did I miss something there?
Triple, yeah, up to potentially, right? So if the protocol, so basically, right, if the protocol's incentive to um, a protocol's incentive to participate in shield mining and put their own tokens up is if they want to boost the APY for providing coverage to their pool, which would therefore attract more users to give coverage. And this is great for brand new protocols that are unheard of. Like let's say we start a new protocol called Orange Swap, yeah, and it's brand new. Maybe it's unaudited. Maybe it is audited. Doesn't matter. It just has no reputation yet. And in order to increase the TVL, you want to be able to offer your users, your community members, the ability to ensure their position on Orange Swap, so they have more faith and more trust into it, right? So, as founders, we want to make sure that the insurance is available, and so to compete with other protocols that may have higher APYs for their coverage pools, we'll put in a bunch of Orange Swap tokens into the protocol coverage pool, and as people provide coverage, they'll be earning Orange, they'll be earning BMI, and they'll be earning Tether. So yeah, triple rewards on that kind of activity as long as they're partaking in the shield mining. But that's up to the protocol to provide
Right.
tokens. So not everyone will, right?
Right, of course, but no, that's interesting. Very cool. Yeah. So then, with like the reinsurance pools, can you break that down for us, and how does that work?
I think actually this question would be best answered by our Chief Product Officer, Hristo. So actually, reinsurance pool is a pool that will de-risk the platform for the users. But Hristo, if you can take this one.
Sure, no problem. Essentially, the idea of the reinsurance pool is a way in which the protocol itself participates in various pools. So essentially, it is a combination of reinsurance pool also does leverage. So essentially, the money which the protocol owns goes multiple times into multiple pools, thus increasing the capital efficiency at no extra cost for the regular coverage providers. So pretty much we as a protocol, from the fees which we collect and from the yield farming, take on additional risk in order to de-risk the protocols for regular users.
Okay. And with with like the leveraged pools here, just a quick question, I guess, on in regards to like with the leverage. Whenever we have that, people like generally think of liquidation as well. Is it possible that those pools could get, could become essentially under collateralized or insolvent and become like create a liquidation event? And what would happen to those pools if that did? Or like how does that affect things? Or what have you got in place to, I guess, protect that?
So essentially, there's no chance of the protocol becoming insolvent, meaning that no realistic chance, even with the way that our leverage works, is that the leverage the risks the pool, so people take on additional risk with their money. But at the end of the day, policies can only be bought on the net amount of non-leveraged DAI, which is non-leveraged USDT, which is within the system. So at the end of the day, the way that it works is that it
Yeah.
cannot become insolvent.
Got it. Yeah, because it's all based off of the non-leveraged. Yeah, you're not taking out policies on leveraged. Okay. Cool. That makes sense. Yeah. And then as far as like a coverage event, like what does that look like for someone if they, we have an exploit or some sort of hack or something like that. What does that process look like? And how does somebody go about that? And what would be some of the parameters that you would only get a partial versus a full, coverage? Yeah.
Right. Yeah, so that's so the actual outcome, which you mentioned at the end there, is all based on consensus, but I'll start from the beginning. So if you go to app.bridgemutual.io, you can see our UI. It's very clean and pretty simple to follow. Once you have a policy, it'll show up on your dashboard. You pay for policies in Tether, USDT, not our token, which I think is important and also very friendly to most users. Pretty soon you'll be able to buy and like DAI in USDC as well, but that's a later release. So let's say that a protocol you had a policy for suffers from a hack, right? A pool gets drained completely. Maybe a liquidity pool gets drained entirely, and you were part of it. So it's pretty simple. On the dashboard, you will see the policy that you have. It'll show the duration, the total amount the policy covers, and it'll also have a little button that says claim right next to it. In order to make a claim, you have to deposit 1% of the total claims value in BMI. So you get some tokens, you deposit the tokens into the contract, and the claim gets initiated. When you press the claim button, it also gives you a prompt, and it has a little box where you can upload files and images and text that support your claim, just go as evidence. The idea is here that you have to basically prove your loss. And what this does is it stops people from buying up all of the coverage available for a protocol that are speculating on the protocol getting hacked, right? You have to show that you actually had a position in the protocol. So you upload the evidence, you submit claim, then there is a 7-day voting period where anyone on the platform can then see the claim, which is active, and the countdown for the 7 days. And they essentially open that up, the prompt goes back up, and it shows all the evidence you submitted, and they determine for themselves like whether or not they believe it was a coverable event. All the votes are on chain. The first vote is anonymous, which means you have to actually go back and unveil your vote later in time. And if you vote in the majority, then you receive rewards. If you vote in the minority, then you lose reputation. So we have a reputation system as well, which rewards people who are voting with the majority, which is we presume and we assume is the correct vote over time. And as your reputation goes down, your voting power actually goes down. If your reputation goes up, voting power goes up. You have more influence and a greater share of the rewards as well. Now, if you vote in the extreme minority, like let's say 95% of the people voted yes and 5% of the people voted no, the reputation loss will be greater, but also you will lose some of the BMI that you've staked in order to vote. Because you do have to be a BMI staker and put your BMI on the line if you're going to vote and attempt to get rewards for voting in the system. So after that's done, yeah, I should mention that if you are in the extreme minority and you lose some BMI, that BMI gets spread to all those who voted in the majority. But so after that's done, the vote gets unveiled 7 days later. There's a short window of time where the user can make an appeal. If they make an appeal, then it goes on through another voting process. But assuming it passes, then a couple of days pass, and then you're able to execute the outcome of the vote, which would be a payout to the claimant or you for making the claim. So that's kind of how it works from beginning to end without getting too far into the weeds.
Yeah, cool. Yeah, it seems very straightforward, and it's nice to see that there's like the initiative or incentive programs to be a good actor, and yeah, like showing that yeah, by penalizing those who are not really doing research, or just like not really being in the minority of that of the vote. Obviously, if you're somebody that's willing to put some stake on the line, you're going to do some research, and you're here to like benefit the protocol. So, yeah, that's a good system.
Yeah, thank you. I appreciate that. We designed it with economic incentives and game theory in mind. I will add also that people that vote a lot, they amass a large amount of reputation. They're also able to be someone that is able to vote on the appeal. So like one problem is like, what's the point of appealing a claim if it's just going to have the same people voting? Like maybe you had a valid claim, right? But it got denied for invalid reasons. When you make an appeal, you want to make sure that you have a better chance of getting your claim heard fairly, right? So for the appeals process, only users with a high reputation can actually vote on those claims. And they're also sharing rewards for voting on them. So it actually pays more to be a user with a high reputation because you'll make more in rewards on the appeals votes than you would on the regular votes, which are split amongst like many people. Obviously, if your claim is valid, you have a greater chance of having the claim approved because it's being governed by users who have already proven to be those who vote in the vast majority and good actors, which I think is cool too. So
Right.
I think that's pretty much everything from the claims process, though.
Yeah, got it. I do see a question here in the AMA text question. What if minority was vindicated to be in the right? Majority does not inherently equal correct.
Yeah. So I can explain this, right? So as I mentioned, the first vote is blind, so you can see the people are voting, but you can't see what the outcome. And also, as I mentioned, if you're in the minority, you lose reputation, and if you're in the extreme minority, you lose reputation and essentially money. If you attempt to kind of defraud the system, like let's say you make a Discord with a bunch of people, and you're like, hey, let's vote no on this claim, which there isn't much reason to do that, given that everyone on the platform can vote, not just the coverage providers. In other words, people who are voting don't necessarily have anything to lose. They're just BMI holders, and they want the platform to succeed and have like a good reputation, right? But if you were to try to kind of stage this fraudulent vote and you know rig the claim system, you have to be willing to wager that your votes don't end up being in the extreme minority. Otherwise, there's a financial penalty. And if you are just in the minority, like let's say maybe the vote is pretty close, it's like 60-40, and you're 40%, then you lose reputation. So your address is now kind of like less powerful than it was before for subsequent votes. Now let's say you're successful, right? You successfully deny the claim with your friends. You guys have enough BMI staked, and you vote on a claim and you get it wrongfully denied. Well, then the claimant has the ability to make an appeal, and it will cost them some more BMI. But if they make an appeal that's successful, they will get that BMI back. And as we discussed just a second ago, those who are voting in the appeals process are already people who have high reputations, which means they've been voting successfully in the past. So all of these measures kind of counteract the ability for someone to rig the system.
Yeah, cool. And yeah, hopefully that answers with for Zappuccini there. And then I do see like another one here. Yeah, like creating 10,000 fake accounts. Well, it's all based off of tokens, so I mean you can spread
Yeah,
it
it's
all
based off
across.
of tokens.
Yeah, so you can
A
spread it.
civil attack, which we're not. Yeah.
Yeah, so that kind of avoids the civil attack there. So yeah. So again, just anybody that has questions, please bring them into the AMA text questions. And I do see a hand up, has been since the beginning. I'm not sure if that was just a mistake or not, but I'll give you an option to come up here. And please, anybody else that does have questions, raise your hand. We'll get you up on stage. And yeah, or bring them in through AMA text questions, please and thank you. Yeah, actually, let's if we can move over there to the multi-chain aspect. With Bridge Mutual becoming multi-chain, how will reputation and staking work if voting across multiple chains?
Right. So reputation will have to be separate for each and every chain. So you'll have your own independent reputation on Solana versus Ethereum versus Polkadot, which we haven't really even started implementing yet. We are going to Solana. We've already started the integration there. I really like that chain. I thought it was a good choice. They don't have any working decentralized insurance protocols to my knowledge. So we thought that would be a good chance to capture some significant market share of there. Yeah, and then staking pools will also all be separate as well. So the Solana version of Bridge Mutual will cover Solana-based protocols, ETH to ETH, Polygon to Polygon, right? Um, yeah, hopefully that answers your question.
Yeah, perfect. Thanks. And then yeah, just
What's important to add here while we're on the subject is that the common denominator, the common thing between Bridge Mutual and Ethereum and Bridge Mutual on Solana will be the BMI token, because the same supply will administrate and will be used for both of the networks. So a portion of the supply will be wrapped and sent through the wormhole bridge to administrate and provide rewards and work on Solana, and all that will cover essentially all the business of bridge on Solana. So this will be the common element that would work on all the chains we'll go to. So for us, this is a big expansion because we'll be essentially every Bridge Mutual on every chain will cover it's on that chain with the common element of BMI token for the entire community to be able to participate in all the chains and all the activities there.
cool. Cool. Thank you. I do see another question coming in here. I guess like what's the differences or like the main differences here between Bridge and Nexus?
Yeah, so I can answer that. There's a lot of differences at the moment. Nexus has like a year more of development time on us, but they were also the early inspiration, things that we didn't like for example, being able to purchase or pay out coverage in NXM tokens, the NXM token being on a bonding curve, um, the claims process being much more centralized. I mean, Nexus is proper a legal entity, right? It's like a mutual fund, and so they've got their protocol kind of backed with this legal entity existing, I believe, in the UK. And I'm wary of saying too much because it's been like a proper year, and so much has happened between Nexus and all the other protocols, and keeping up with all the protocols at the same time, and also developing one and leading one your own is a difficult task. So I may say some things that are outdated and maybe no longer true. But at least when we started the project and a few months after that, I was very aware of everything Nexus and everything else was doing. And so these are the differences that I noticed back then. But the claims process was much more centralized. Essentially, there's an advisory board which is voted in via DAO, which is kind of like decentralized. But in truth, the team and the investors hold most of the tokens, right? In most projects that don't have like a fair launch, and so who sits on the advisory board? It'd be the team and the investors from the beginning, right? And so these are the people that have the ability to overturn claims or punish users and strip users of their tokens, and things like that. There's also KYC in Nexus. If you ever tried using it, you can't unless you upload your identity verification documents. And these are all differences between us and them, right? We're hoping to be like a truly decentralized, truly DAO managed, scalable solution where the people become the insurance company essentially. I'm gonna mute myself real quick.
Yeah, to add maybe on top of that, the Nexus model is just different. It's a much more centralized model. They operate in a different way. It has its own benefits, but for us, the fully decentralized, no KYC element also gives us more flexibility and an ability to develop and work faster, especially with decentralized protocols. we're not binded by all the regulation / due diligence / KYC things Nexus is binded by. Of course, there are good sides and bad sides of it. So we're just operating in a different model. And we think that this model, given the direction in which DeFi is going, the composability and interconnectability will allow us to, with time, develop more tools that will be much more easily accessible to users. Because this is the promise. This is the promise of scalability here, that with us, you only need to log in with your wallet, and that's it. And with Nexus, you need to go through a much more complicated process to participate in the protocol. We offer something different. We offer right now a number, but in near future, a multitude of risk-based insurance-like products accessible to everyone. So we recognize this as the next wave or the niche within DeFi as the IN, so decentralized insurance. So as in the legacy finance, insurance is a huge component of the financial market, and there are a number of different products that you can find there, fairly complicated ones and simple ones, but all of them expanding the ecosystem. We plan to do that in the decentralized world in a very accessible way, and we want to integrate and build on those DeFi, decentralized insurance Lego.
Yeah, really cool. Really cool. Yeah, just decentralized insurance for the people. That's yeah, a really good approach. And yeah. Cool. Then this other question here, and again, if anybody does have questions, please raise your hand and we'll get you up on stage. You can ask your questions via voice as well, but thank you for keep bringing them in through the AMA text questions. Will fees collected on Solana have its own capital and reinsurance pools? I think, yeah, just based on what you've said before, I'd say yes.
Yeah, I would also say yes. Hristo, correct me if I'm wrong. Yeah, I don't think it works any other way. And to make it work in a way where, yeah, Hristo's unmuted himself. I'll let him explain, but go ahead.
Correct. You can imagine that the Solana implementation of the protocol would be essentially a replica of the Ethereum version, with the only exception that the Bmi token will be shared between the two systems, essentially creating additional demand across the two systems for the token. But both the capital, the coverage, the policies, and everything else will be chain specific.
Got it. Thank
Yes.
you. Oh, go ahead.
Additional thing that what will happen with the protocol and what will be the trend is that the utility of the token will continue to rise because of the role the token plays in the administration of the entire platform, the adjudicating processes. We will have one token essentially spread across all the chains we'll go to, and then there is another level we're currently exploring. So we're working on creating enterprise pools for very, very big DeFi yield generation protocols right now. We won't share any more details, but this likely will materialize itself maybe end of this year, early next year, where the token will be also a part of the rewards the policy holders from those specific enterprise products will pay back to the coverage providers, to the community. So the role of the token will continue to increase. This is something we had in the design from the very beginning. This is also the reason why we didn't want, as Nexus, to include the token as the token that we would pay out the claims into, because we felt that okay, users that receive their claims, they want to receive them in a stable value that's represented by the stable coin, not in the token that's much more volatile. So we designed the utility around all these other factors surrounding the platform. And another thing that will definitely contribute to that is we're already planning and thinking about the buybacks that can be done once the DAO is there and approves it. The revenue generated by our capital pool, so the revenue generated by the protocol, by the investment part, can be used to create further buying pressure and to buy back the tokens from the market. So this will be for the DAO to approve, but we're extremely excited because this entire framework of token utility will rise with the number of products we'll be releasing this quarter and the next one.
Yeah, great, great. Yeah, cool. And then let's maybe just talk a little bit about the Bmi token. Of course, anybody can find it over on Sushi, and we've got a liquidity pool over there. Yeah, so then with that, like I see, we were at like 500K in value and 32 sushi per day, 37% APR, and you guys are also planning to bring over some liquidity as well.
Yeah, that's right. We have about 1.3 million in liquidity on Uniswap that we will be transferring over to Swap. I think by the end of this week, so like 2 days, maybe 3. At the moment, we've had a Uniswap LP pool open natively on our platform for a while. The rewards for that will be discontinued, and we will be moving over to Sushi Swap and partaking in the double rewards program for users to earn both Sushi and BMI when providing liquidity. So we're really actually excited about that.
Beautiful.
Sushi Swap so far is an amazing partner for us, and we really like the team a lot. So we're happy to be with the family now.
Awesome. Glad to have you guys. Glad to hear it. Yeah. Again, questions. Please, anybody from the audience, raise your hand. We'll get you up on stage. I always like it when we have voice questions. But yeah, if also keep bringing them in through the AMA text questions, and yeah, we'll continue to ask them that way. I do want to shift over and talk about the move to a DAO as well for you guys, and how you guys envision that and what you see that, yeah, and how that'll all work.
Yeah, we're excited about that as well. Again, so ethically, and since the beginning, we've wanted to become a real DAO, right? So community putting up code-based proposals to improve the platform and add new functionalities and new products. I mean, there are models and methods to make traditional or products, insurance products that mimic traditional insurance products, from car insurance to health insurance. Um, they are more complicated. They will take time, obviously, to implement, but it is possible, and it's possible with this system. And long term, I envision um, as BMI continues to grow and it becomes this like have a life of its own, and people start to develop it because they are incentivized, because they're part of it, and they're a token holder, and they see the DAO works, right? I envision that like there will be people who are handling claims full time as a job, like a source of income for them from all over the world, right? Just handling claims, making rewards, voting properly and honestly, and getting rewarded for it, and that being their income. So yeah, we will be DAO managed. We are focusing by the end of the year, so I'm guessing mid to mid late December is when we will fully transition. And with the transition, we'll go hopefully all power. We know we haven't really decided on I mean, we know the DAO will launch by end of year, but we don't know how much control we can feasibly and realistically give over. There are issues with prematurely giving up total centralization for decentralization. I mean, what you see in a lot of new DAOs is that the first the first vote or the first proposals that come out are like, hey, let's empty the vaults and give all the tokens to existing holders and stuff like that. So, we're wary of that. We definitely want to attract more talent. A lot of people here, for example, would be like amazingly ideal candidates to have active in our community. I'm sure a lot of the people here are much more sophisticated DeFi users than the average bear, just by virtue of you all being here. So if you have any interest at all, we would love to see you guys in our Discord as well. Chat it up and get involved. We definitely do notice specific community members, like for example, just a shout out here, IQ Global is in the chat. He's been asking some questions. I've seen his name around for many months, and we do pay attention. Murad is here. Yeah, so anyways, without dragging this on much longer, we haven't decided whether or not we go full DAO from the start or we slowly transition to it, but the end goal is 100% to just completely make this decentralized, and for me and others in the team to kind of step down and really only do basic community management. We would love to see more user interfaces pop up using our protocol, and then have our protocol integrated into many other protocols. People can buy insurance as they're staking, and so on. Yeah. Did you want to say something? Okay, I'm past the mic real quick.
Yeah, a small comment on my side, maybe just to explain the reason behind our branding and the story behind all the knights and the medieval theme we have. So we're all the team member, all the BMI leadership are big on decentralization and on the, say, philosophical aspects of building businesses and initiatives on blockchain. We really love that. And we think this connects with the solidarity aspect. So Bridge is a tool built by the community for the community. It's a tool that allows users to get protection for their portfolios for all their crypto activities, while others can also in solidarity provide that protection in exchange for a fair and transparent yield. So there is a very nice story, community / solidarity element to it, which we really like. And also this inspires us and encourages us to build a tool that would have a life of its own, as Mike just said, something that would be at this collectively managed hive mind that would protect its own members' interests via transparent insurance tools. So I know this is a phrase that's being thrown around a lot, but we really do see this as a new paradigm for risk-based products and for insurance. So we want to be the centralized blockchain crypto insurance business project that actually builds that.
Great. Yeah, good. Yeah. Okay. If anybody else, again, questions, come on up on stage. Would always appreciate that. And what have we got here from? If there's no KYC process, it means investors can be completely anonymous. So when regulation come, yeah, I don't know. I think that one we can kind of leave that alone.
Now there's
Yeah.
There's two lawyers as founding members, and also the CEO was a lawyer. To any and all like regulatory legal questions, you have to understand there's not much that we really can say publicly and speculate on how things will be interpreted by whichever governments. We're focused on building this product and making it decentralized and letting it have a life of its own. So that's really all I can say at this time. But thank you guys for your interest in these complex subjects.
Yeah, perfect. And then, yeah, with so you've got 20 million in coverage in the protocol. Perfect. Let's see one hand here. Is this Sure. Yeah, sure. If you want to come on up, please. Sure. Yeah, I'm not sure if that was a mistake or not, but come on if you're looking to chat. Oh, there he is.
Yeah, can you hear me?
Yeah, go ahead.
Okay. Question. I see that you have a number of investors and partners. One is the partner category on the BMI website. The second is the investor side. How much money have you raised, and how long will it support the team to continue working on building BMI?
Yeah, sure. So from our private investors, we raised near $1.7 million in a private sale, and I can't speak to the personal treasury of BMI at this time, but I assure you that we have enough to continue development for at least 2 years, assuming nothing changes. So I think we're good. We're relatively conservative in the way that we manage things, given that we're all professionals. We've all owned and operated businesses some way or the other, and I'm pretty sure as well that compared to other protocols, our treasury is larger than most, I guess. So I wouldn't worry about our runway. We have a lot of resources to continue development and expand.
Thank you.
Thanks, Sure. Yeah, looks like we got a couple more questions typing in here, so we can get those up. But yeah, let's see what that brings.
Maybe to answer the question that was also asked, maybe the difference between the investors and the partners. So partners represent projects that even before we launched recognized an opportunity to build products together, and we officially recognized and confirmed that we want to build something together once Bridge Mutual is launched. One of those things is the widget itself. So a lot of the protocols that we have currently on the platform were initially kickstarted with coverage liquidity by the protocols themselves. Because as a protocol, you can, of course, and you get a number of audits to provide proof of security to the community. But the way we explain it to other project founders is that insurance is complementary to those audits, because on top of that, on top of audits, you gotta have a pool that allows users to get insurance for the product. And what that does is users who have insurance, they feel much more confident about their investments, their spending, and they're willing to stake more and buy more in general. It's a very positive trend we see, and founders, they recognize it. They see it, and they kickstart oftentimes their own coverage pools on our platform, and then they market it as something that they would like to give to the community, because essentially that means they have skin in the game, or more skin in the game, because they're willing to put up money to guarantee that their project, that their protocol won't fail on the security side. So partner projects are mostly protocols that will at one point utilize our widget. So they will usually, what that means, they will distribute um, insurance for their own protocol in exchange for a commission, of course. But yeah, this is a recognition and validation for us. Was very important in the beginning of the project, and still is, because recognition from other DeFi project founders and professionals is something we treat very seriously, and we use it as feedback to build on the platform.
Good.
I'll also add other things real quick. I'm sure we have questions coming in, but someone mentioned earlier is version 2 audited. What a lot of people don't know about the space is that auditing companies have like super high demand and time. There are also many are not perfect. I mean, I won't name bad, but there are plenty of like semi-reputable and even reputable auditing firms who have done audits for well-known protocols, and those protocols still suffer from exploits and hacks. So audits aren't like the end all be all. I think that the number one thing a team can do is take their time and hire amazing talent. But of course, auditing helps, and we do internal audits obviously too. But what we've experienced, like for example, we had 2 audits, and even with our launch, we experienced some bugs. And fortunately, like I said, the bugs didn't cause economic damage to our user base, but we did end up, using some of our treasury to help cover the cost for these things, and it just goes to show that these audits are not perfect and they shouldn't be overly relied on. And we, as an insurance company or an insurance protocol, we would make that statement broadly for every protocol, and not to put too much faith into audits, because people can change code after audits, and you don't know when they were taking place, and protocols are constantly developing. But what we have noticed is much more effective, at least for us, than paying and waiting for these audits to be done, is to launch bug bounty programs, which we have open and we've had open since launch. And our bug bounty program currently is with Immunify, and there are rewards available up to $70,000 for those that find critical bugs. And these types of platforms, they attract the kinds of talent, like the kinds of hackers, white hat hackers in this case, that are as competent as those who are robbing and hacking and exploiting these protocols for millions of dollars. And so we're happy to have them, and using them, we've discovered many more bugs than our audits ever have. So tomorrow, actually, we are publishing another round of bug bounties for all of our version 2 contracts. And so if any of you here are developers, hackers, and the like, we encourage you to take a look at our bug bounty program tomorrow.
Nice. Yeah. I just one thing I wanted to point out here as well, as we got from Omer Simpson here in the text questions. There is a Bridge Wallet iOS app, and apparently that looks very similar to your app. and we should be very cautious around that. I'm not sure about this app, but just want to give a heads up there to anybody that is thinking that this is related. It is not, correct?
Yeah, that's correct. We have. I don't even know about it, but we don't have any app store, and I'm assuming Bridge Wallet is just a wallet named Bridge, and it's conceivable that they use the letter B as their logo. That's a pretty easy thing to do. So
True.
yeah, that's not us though. No.
Yeah, so just to avoid any confusion there, the iOS app is not for Bridge Mutual. So yeah, just heads up there. Don't know anything about that app, but yeah, just heads up everyone that that's not connected. And of course, if any app is asking you to enter in your seed phrase immediately, maybe reconsider that one.
Wow, our logos are really. It's not even a B actually. This logo is 3 arches, all different color blues, just like our logo. That's really interesting. No, I don't. That's kind of uncanny. Also, all lowercase. No clue. No clue. That's interesting though.
Yeah.
Not us though. There's another question from Jonesy about the possibility of a sex listing in the near future. Yeah, the exchange game is also something that not many people who aren't intimately involved in the industry kind of know about. It's a wildly political place with a rapidly changing landscape, and the people kind of like in power, so to speak. As I said, it's political, so they're literally like sections in small tribes and groups of people that work with these exchanges and they're in these exchanges. They get rotated out like relatively quickly. The kinds of people that you would talk to get listed per se, like on Binance, last year are not the same people as this year, and the same goes for Huobi and everything else. And how you get listed is also significant. Like listing fees can range from on like tier 2 and tier 1 exchanges from like $150,000 to a few million, or they could ask for a percentage of your token supply on various different terms. And so yeah, we're focused on getting listings, right? But we're trying to do it in a way that doesn't completely screw over um, our economy. And you'll see in some cases for some tokens you get listed on a tier 1 exchange and the token plummets. Like, and why would that be, right? And that's because of almost certainly whatever deal they made to get listed gave the centralized exchange a bunch of tokens, and then they just dumped them on the market. And so we've been avoiding bad deals and also being very careful about how we approach these exchanges and who we approach on the team, because we want to make sure that it's someone that is like a long term in the exchange with a high position of power and authority. We don't want to get pitched too early or pitched to the wrong people or offered the wrong price and then start from like a disadvantage in negotiations and things like that. But yeah, we have and will. We have been talking to these exchanges. We will be getting listed on additional exchanges. And right now, we're working with one of the best market makers in the space, known as GSR. Market makers are very important for many reasons. I won't go over them here, but they're also helping us to make the proper context and not get totally reamed in the listing process. So thank you for that question. It's always fun to talk about that stuff.
And Jonesy, it's just come to sushi. What are you doing? But yeah, cool. Yeah, I don't know. We're getting close to an hour here, or yeah, if there's any other other questions here, please bring them in here. But it's probably getting to a good place to wrap up. I don't know, maybe if you guys have any final thoughts or comments here for the audience.
Yeah, so maybe this is the time for us to thank everyone for being here. As Mike and myself said, we really look forward to have you engaged in our community channels as well. We would like to hear your feedback, your thoughts, your insights. As I said, this is a tool built by the community for the community, so we want to build tools that are useful and that people will use and that will increase in value. We are here to build a long-lasting product that will take a life of its own. We're very happy that we're introducing novelty and innovative products as early as next week. But the vision for the BMI is just consistently growing and is fueled by the amazing community and contributors from all over the world. So we would love to hear your thoughts about it. This is also the reason why we wanted so badly to partner up and work with Sushi, because we know this is the community of builders and people who actually care about the DeFi landscape. So we come from the same tribe, and we want to exchange thoughts. We want to exchange insights, and hopefully we'll build something great. So we want to be the biggest decentralized insurance protocol taking off very soon, and we would love to hear your thoughts and you to get involved.
Perfect. Cool. Well, yeah, let's. I think this is a great place to wrap up here. If you guys don't mind here, how do we find you? What's your website, social? We can plug all that stuff now. And if you guys don't mind, type that into the AMA text questions as well. That way people can find any links and resources that they need.
Absolutely. Yeah, the website is bridgemutual.io, and all of our socials, some there, Bridge Mutual is one word, or Bridge Mutual separated by an underscore. We're going to post everything in the AMA text questions chat in just a little bit. So yeah, and if you guys are ever curious, we're very active with our Twitters. Pretty much every development update that we can talk about publicly gets posted there on time. And our Discord is the way that we prefer to just talk to community members. If you're interested in being a part of the community and helping us grow, please go there and say hi. And Telegram is mostly just a chat room that's too messy to organize. So yeah, and it was great. Thank you, Tangle. You're an amazing host, and like I said, if you are interested in being the host for a late night radio show with that kind of voice, let me know. I got some friends, and I'll plug you in.
Well, thank you very much. I appreciate that. And you guys have been great guests. So happy to have you on here. Awesome. All right. Well, yeah, have a look over into the AMA text questions. We've got we got the links there for that. And of course, head over to their website and to find the official links to connect to their Discord and any other socials there as well. For anybody that has been in the room for 15 minutes or so, we're going to try the DGen bot again today. So you should receive a DM from DGen, the DGen bot. So just please, if you haven't already, make sure that you've got your DMs open. I will shoot that off here shortly, just as after we wrap up here or close out. And so just make sure you've got DMs open. If not, it will fail, and then you will not get your POAP, which you got 30 days to claim. This has also been recorded and will be uploaded to YouTube and will be on the Sushi official channel, so you can check that out shortly after. And of course, follow me on Twitter, 0xtangle. You can stay up to date with all the upcoming AMAs and other Sushi events. Of course, we do have the Sesh bot, which can send you reminders and keep you up to date on upcoming events that way too. So head over to the calendar channel in the Sushi Swap Discord, and that way you can stay up to date. Just click that little green check mark, and it'll give you a DM and give you some information from there. But aside from that, thank you guys so much for coming on. Really appreciate it. And after we wrap up here, everybody just stick around for the POAP, and we'll make sure that works out all right. But thanks again, guys. Appreciate it.
All right, cheers.
Thank you, guys. Bye-bye.
Bye-bye.
Everyone.